All right. Hey, everybody. Welcome to the morning market briefing, Friday, March 4th, 2022. Hope you are hanging in there. Crazy week. It seems like they all have been lately. Lots to chat about. Want to set the tone a little bit just to give some framing on the market right now. Dow futures down about 85 basis points. S&P and NASDAQ down not quite as much as the Dow, but relatively synchronized in terms of futures trading. We do have some economic data coming out as we speak, but we're going to start with really the major story for the day. Of course, going back to the Ukraine for more coverage, but European stocks really just pretty strongly hammered after a fire broke out at a Ukrainian nuclear plant. So there's a fire at a nuclear plant, sparked fears of an accident. There was a lot of speculation about what this could mean in terms of potential nuclear fallout. Ultimately, the fire was in an administrative building. The reactors are relatively well protected. I read a lot of Twitter threads. I feel like I really got up to speed on how these plants are set up. I don't know if any of that information was accurate, but in essence, the actual nuclear reactors are designed to be pretty well guarded, pretty well protected. So I think the worst case scenario is, in terms of nuclear fallout, has been addressed and mitigated and is not a huge concern. But the bigger concern right now is that the plant is under control of the Russians. Russia says that the Ukrainian operators at this plant essentially left the plant, and Russia just walked right in. Later, the Ukrainians came back to try to retake the plant and are blaming the fire on the Russians. But again, it is in possession right now of the Russians. Ben, big story. The U.S. Embassy has said that this is a war crime to attack a nuclear power plant. First time we've seen, I think, that level of strength and wording from the U.S., but worth kind of, coming out of a U.S. embassy that strikes a little bit of a different tone from what we've seen. What's your read specifically on the nuclear plant situation? I know they are expecting inclement weather in the area, and it's obviously a concern to have such a crucial piece of infrastructure under control of the enemy.
Yeah, I mean, this is 20% of Ukraine's electricity. So basically what this does is Russia is trying to grab all the infrastructure it can, because then it's just going to increase European reliance on their natural gas. Natural gas prices continue to spike. Wheat prices are up 38% in Paris this week. So get your French bread while you can, because prices keep going up on that. And as we talked about yesterday, this is Putin's strategy is to cause pain and splintering in Europe. And the way he's doing that is through the energy markets. Already we're seeing this morning, the US saying any additional sanctions, especially on energy, just serves to enrich Russia further. And so I think we're almost sanctioned out in terms of how the US can respond to this, how NATO can respond to this. And I think that the more that the Russians can get a hold of Ukrainian energy infrastructure, the more power that they have, and it becomes clearer to the Ukrainian people that they're just fighting a losing battle. And I think as soon as you have that mindset shift, people fall off the wagon very quickly. There was a lot of nationalism and unity over the last week in Ukraine, but the consistency of the Russian invasion, I think, is beginning to maybe start to wear down the will of the Ukrainian people.
Yeah, it's interesting if you look at kind of the various ways in which Russia is invading and taking over large parts of Ukraine. I think at the beginning of the week, the major story was that massive convoy going towards Kyiv. That remains relatively inactive and essentially stalled out, but Kharkiv continues to be under assault. Russian forces have surrounded a southern city in Ukraine, Mariupol. They're also working towards Odessa. So while maybe that large headline-grabbing convoy has failed to maybe make the progress that many feared and that the Russians expected, attacks continue to go on elsewhere. There were continued talks between Russia and Ukraine yesterday. They at least believe that they've established some protocols to allow people to actually exit Ukraine, some protocols of safety. I mean, I think Zelensky's quote on that measure is exactly right. Today, we'll see if that agreement actually works. it's hard to necessarily expect a whole lot of respect from the Russians, given the way all of this is unfolding. Ben, on the NATO side, what's going on? What is the next step? You mentioned we're kind of sanctioned out. What else could be done?
Yeah, they had an emergency meeting this morning, but out of the meeting, it was basically saying both German Chancellor Olaf Scholz and Secretary of State Blinken said that we're going to defend every inch of NATO territory, but that is very specific, NATO territory. They don't seek conflict with Russia, but are ready. They're actually talking about beefing up NATO armed forces. But Olaf Scholz, extremely clear, NATO will not get involved militarily in the conflict in Ukraine. So there's a red line there that the NATO is not crossing. They do not want conflict with Russia directly, because, as they said, and we're starting to see headlines from that conference today, NATO saying that is actually things are about to get worse, and they're going to continue to remain on the sidelines. Stoltenberg also saying that we should not have NATO planes in Ukrainian airspace or NATO troops on Ukrainian soil. Another headline saying that NATO entering the fighting in Ukraine could lead to a widespread war in Europe, which would actually increase suffering. So that's the NATO philosophy right now. They're obviously condemning very strongly what's going on in Ukraine, but in terms of actually getting involved militarily, it looks like that's off the table, which again could just further to isolate Ukraine and maybe dent some of that will and of the resistance there.
Elsewhere in the world, Iranian nuclear deal, we are seeing, it seems like some progress on that front. If you're wondering why that would be significant, ultimately, if an agreement is reached, that could mean additional oil supply for the rest of the world. But to do so, you'd have to reduce pressure on Iran. Ben, what's kind of the state of play there, so to speak, and what are the final points that people are hung up on?
Yeah, Iran seems to have somehow it has leverage in this negotiation because the West is very concerned about the availability of oil and gas. So they want more Iranian oil on the market. Iran, though, says that there's a red line that they're not crossing. And that red line is they need all the sanctions lifted on a lot of these terrorist organizations, including the Islamic Revolutionary Guard Corps. They want that organization taken off the terror sanctions list because right now it's listed as a foreign terrorist organization, and they said that has to go. The British negotiators said that we're very close to an agreement, but right now Iran not only has the oil that the West needs, but they also are only 6 months away from a nuclear bomb because they just reached record levels of uranium enrichment. So based on that, Iran somehow has leverage in this negotiation, and it looks like they can ask what price they want. So there's some talk about coming to an agreement over the weekend that could pressure oil prices, but briefly as we hit next week, because I think the underlying trend in oil is still up. And that just continues to suit Russia's aims and Iran's aims for that matter.
Bringing it a little bit more close to home, we do have the jobs report for February came in right at 8:30. The expectation was for 423,000 jobs to be added. Last reading was 467,000. Tom, where did we come in? What are we seeing? What's the impact?
Yeah, so we actually had a huge number this morning. Though I did see a couple of tweets before the number came out, basically saying non-farm payrolls this morning. Does anyone care? Just with everything going on, I think this is going to be lost on everyone. But the expectation was for 423,000 new jobs. We came in with 678,000 new jobs. And they've revised the last months up by another, call it 14,000 jobs. And the number that's interesting too is that the labor force participation rate actually went up as well. So the expectation was for 62.2% of people to be participating in labor force. And we went up by 0.1% to 62.3. So that's a trend that we've been seeing as the participation force has increased and continues to be increasing, which has always been what is real employment over the last 10 years, because people have said, so many people leaving the workforce. So the people working is contracted, and therefore unemployment is actually much higher than indicated. But if we see a huge job number and we see the participation rate go up, that's definitely an interesting piece of information. One other takeaway is the average hourly earnings year over year was a big miss. The anticipated number was 5.8% increase year over year. We're only at 5.1, which does bode well for inflation. Obviously, wage inflation is a big piece of the pie, and having it come in a little bit light here is an indicator that perhaps we've already peaked on inflation. We've got CPI coming on the 10th, which my feeling is going to be the high water mark, but we'll see what that number looks like when it comes out. But the interesting reaction is, as soon as that number came out, bond yields actually fell. So bond prices went up. We started the day over a 1.8 on the 10-year, and now we're significantly below that. The 2-year Treasury's fallen as well. So it's kind of an interesting move. Bonds are all over the place overnight. If you were looking right as the news hit with the nuclear power plant fiasco and all the headlines there, we saw rates drop huge and then kind of rally as it kind of alleviated itself when people decided that it wasn't going to be Chernobyl 2.0. So we've been all over the map overnight and this morning. A little bit of an counterintuitive move to see rates fall on a huge jobs number like this, but at the same time, I think this is small potatoes versus what's going on globally. And so, rather than hanging on every jobs report and every CPI number, I think there's a lot bigger fish to fry. So this is kind of a nothing burger for the markets this morning.
Yeah, I kind of agree. I mean, it's been wild because I feel like essentially as long as we've done this call, which we're coming up on, I guess, 2 years of, the employment report was, pretty consistently the biggest data point of that given week every time we were getting it. And obviously this kind of puts it into some context and some perspective that, not only is that not the biggest story, but it's also kind of another sign of, hey, we're kind of moving out of this recovery talk and kind of getting into a more normalized economy in terms of what data is going to move the market. And at the end of the day, there's a much bigger headline. Ben, we did get some earnings. We'll wrap up the call for the day and for the week with earnings. So we got earnings from Costco and Broadcom. Talk to us about what we saw there. Two very different reactions. Broadcom up about close to 3%, Costco down close to 3%, despite pretty good numbers. What's kind of under the surface with those two companies?
Yeah, I'll hit those in just 1 second. Just a couple stats on that employment report that I think are interesting. There have been only 11 jobs reports in history, only 11 months in the entire history of the United States when we've had more people working than we have today. So when we're talking about labor shortages, unless you're talking about labor compared to April 2019 to February 2020, those are the only jobs reports where we've had more people working than we have today. Now, the participation rate is lower than at any time in the previous decade. We're at 62.3%. The low of the previous decade was 62.4%. So we're still low. So we need to get more people working and back into the labor force. But right now we have more people working than any other time. We're in the top 12 of all time. So I think that that's an important perspective, because we talk about labor shortages, but it's labor shortages relative to elevated demand. Demand has increased, labor's about the same. And so you have labor shortages as a function of demand, but that's because of the demand, not necessarily the labor piece of it. So that's just one thing I wanted to talk about there. And it also means that Fed's going to be all guns blazing for a couple of weeks. But on Costco, this is just I think Costco's a buying opportunity here. It's down 2.9%. They beat on revenue. They beat on earnings. Analysts do what analysts do. And they wanted Costco to take the oath that there was going to be a membership fee increase later this year. They said, hold your horses. We do it about every 5.5 years. This summer is going to be 5 years since our last membership fee increase. We'll see what happens. And analysts don't really like that. They wanted an immediate thing. And then also Costco just continues to lead on price. They say, just because we can charge more doesn't mean we're going to charge more. And so their margins shrunk just a little bit this quarter, but again, they still beat on earnings. So I like Costco here. I think it's a very good place to park money. I think it's a stable place to park money. And I think that don't be surprised if you are a client to see some purchases of Costco in the next month or so. Broadcom is a large semiconductor company. They also have a software business. They said that demand's going to remain strong. They have orders through the first half of 2023. In the back half of 2023, 2024, that says that's what we don't have very good line of sight to right now. But to have line of sight over the next 15 months for a semiconductor company is extraordinary. You just don't see that. They're saying that Apple is seeing, quote, strong demand. And they're saying that they have demand across all their verticals, whether it's enterprise, which is really driving their business as companies reopen and upgrade their networking equipment, telecom, who are investing in 5G, and hyperscale data centers. Hyperscale data centers, with all this video content that we have, they need a lot of memory chips because they need to store that video somewhere. You're not storing it on your phone, it's stored in the cloud. They need to have more memory chips for that. So Broadcom performing well, and their stock is justifiably up this morning. So overall, we're seeing really good data out of companies. We're seeing really good data out of the United States. It's this Ukraine thing that's continuing to hang over the market.
Awesome. Thanks, Ben. Thanks, Tom. It's going to be a busy day. No better sign of that than about 10 minutes ago, Sam Frost, who's a portfolio manager and analyst here, walked in and his laptop was open as he walked through the parking lot. So we're ready to roll. Appreciate you guys, as always, for being here. I'm preaching to the choir a little bit here, but we really appreciate you guys being on the call. Please share it with people. I think it's been helpful. I hope it's been helpful for those of you that are on here all the time. We're in the process of reworking some formatting and trying to get the production quality a little bit more sophisticated. We're working on some other content that'll be available kind of more in podcast form that's a little bit longer. As a reminder, if you ever miss a call and you want to check it out, if you use the podcast app, you can just search Narwhal Capital. We're uploading stuff there. John Grayson, who's an account executive here, has taken over kind of the editing and producing of the morning show and getting everything uploaded. So big thanks to John, big thanks to Tom and Ben. We put a lot of work into it. We hope it's helpful. If there's ever anything in particular that we can be addressing or talking more about or less about, let us know. I mean, please don't send us an email and tell us to stop talking about Russia and Ukraine. Trust us, so we would love to. We tried to, just wasn't in the cards. But we really appreciate you guys. And if you know anybody that this would be helpful for, please be sure to share it. And hope you guys have a great weekend, and we'll talk to you soon.